I didn't expect $1,000 rise in gold or the kind of rise in silver. Even if the fundamentals want to move it higher, it's an overbought scenario and profit taking will come in. That was the primary impetus that took gold and silver lower, that broke everything. And so it was way, way overbought. I think we did 30% in 4 months. And it really went to levels that I was looking for in both gold and silver. And we also believe that there's going to be a correction when it hit those numbers. And that actually came due.
And for many years, governments have been patching holes with duct tape in the economy and borrowing more money and printing cash to keep those things afloat. But frankly, now the boat's starting to leak faster and faster than they can fix it.
In this market update, expert analyst Gary Wagner breaks down a crucial signal flashing on the gold charts. After a powerful rally that pushed prices from around $3,350 to nearly $4,400 an ounce, the market has now formed a pattern that hasn't appeared since 2013-9 consecutive weekly candles, signaling potential exhaustion. He explains how a dark cloud cover pattern has emerged, often a warning of a possible shift from bullish to bearish sentiment. On the daily chart, 3 specific candles starting from Wednesday through Friday hinted that gold's momentum might be slowing, and Monday's $124 pullback confirmed that concern. This isn't necessarily the end of gold's strength, but it's a reminder that every rally faces a test. Consolidations can create opportunities, and understanding these signals helps investors stay ahead, not behind. As markets digest the latest move, all eyes are on whether gold can hold key support or if a deeper correction is on the way. If you found this analysis helpful, make sure to like, share, and subscribe to the channel for more insights into gold, silver, and the markets that shape your wealth.
But as far as the candlestick pattern that we recognize, it is the first occasion since 2013 that on a weekly chart, you get 9 consecutive candles, and it is an exhaustion signal. On top of that, that red candle created a simple candlestick pattern called a dark cloud cover. And so the combination of both of those, to me, gave a high probability of possible sell-off and corrections, the foreboding of extreme positivity or bullish market sentiment moving to bearish. We'll look at a daily chart, and when we do, you'll see that there are 3 candlesticks beginning on Wednesday, the 22nd, Thursday, the 23rd, and Friday. And the size of particularly Fridays and Wednesdays, the article was the 23rd, it was looking at this candle, spell a potential reversal or consolidation in which a big move could be coming. And that's exactly what we saw, because on Monday we saw a drawdown of $124. I mean, realize this rally from the beginning at $33.50 up to call it $4,400 an ounce was ridiculous. Currently, this correction has given back about 10.5%. I believe there's a high possibility it could go a little lower. I was hoping to find support at the 38.2%. That would be a real shallow correction, but realized that when we got a signal from a weekly chart, it would give you different numbers altogether. So my sense is that if it does continue lower, 38.72, that is just a 50% retracement. And you see that a lot in stocks. They move up $2, they come back and correct $1. The big one for a deep correction is a 61.8% correction, and that would take gold to 37.48. But traders, here's the good news. For those that know my technical studies that we use, this rally, in terms of an Elliott wave count, this is all wave 1. And we are now, I believe, in a wave 2 scenario. And when that ends, and it will, I'm still really bullish on gold, When that ends, whether it finds support here, which is less likely, or around 38.70, 37.48, in other words, wherever it ends, then we're going to start a third wave, primary third wave. These are primary waves. And a primary third wave, by its definition, is never the shortest of the impulse waves, which means it could have this kind of move again. One thing we do know is if we do get a third wave, as I believe we will break 4,400 again and head to new areas that we have never seen before. 45, 46. It's just exciting. And my idea about this correction is it's been long overdue.
Yeah.
I mean, look, we've never seen, we have seen, but very, very infrequently, this kind of move from 33 to 43 is $1,000. And then it goes above that by a little bit. So $1,000 rally is not what we're used to. And that's what this was. When you consider I marked the beginning at 33.48 and it trades to 39.95, that is a huge move. And because of that, that's why I think this correction could continue to go on. But realize that ultimately, this market is based on fundamental drivers. So rate cut, that's bullish. A successful trade talk with the president of China and Trump, that will affect the market. That will not be bullish because that tends to bring gold down.
In this powerful breakdown, financial strategist Lynette Zang paints a clear picture of where the world's economy stands. For years, governments have patched over cracks with debt, money printing, and quick fixes. But now, the leaks are too many, and the water's rising fast. The system that once floated confidently is starting to sink. Some of the biggest names in finance, the so-called smart passengers, are quietly reaching for their golden life jackets. From billionaires like Ray Dalio to major institutions like Canada's Pension Board, there's a growing sense that the dollar and government bonds might not hold up much longer. As confidence slips, gold and silver are stepping back into the spotlight. The physical markets are starting to overpower the paper markets, a shift that signals where real value lies when trust in fiat fades. The message is simple. When the financial ship takes on too much debt, only those holding real assets stay afloat. Let's get back to the interview.
And for many years, governments have been patching holes with duct tape in the economy and borrowing more money and printing cash to keep those things afloat. But frankly, now the boat's starting to leak faster and faster, faster than they can fix it. So some smart passengers like Ray Dalio, Ken Griffin, these are big kahunas, they're grabbing golden life jackets. Why? Because they think that the boat's money system, the dollars and the government bonds, might not hold up much longer. And if the crew keeps ignoring the leaks, well, odds are more weight, more debt, that boat is sinking. Even big institutions like Canada's Pension Board, well, they're worried and they're saying, hey, maybe treasuries aren't the safe spot that they used to be. Oh, shocking. They were never, but I guess with a lower level of debt that could work. So what are people doing? Well, they've been jumping toward gold and toward silver, physical. The physical markets are taking over the paper markets. Now, I know what's happening in the paper markets today. Of course, everything is severely stretched. And right now, we are on risk on. But quite honestly, with the U.S. Treasuries, well, they aren't the unimpeachable safe harbor asset that they were once, well, at least that they appeared to be. And it's a phenomenon repeated across the bond markets all over the world. Those long-term bonds, we've talked about this quite a lot. And as you can see, the percentage of foreign officials' share of outstanding treasuries, we've talked about this over and over again, they've dropped from over, well, I think in 2008, we were at 45%, and now we're down to like 15%. Hence the stable coins to create a new false market. And what about gold? Well, global central bankers have been loading up on gold, and who knows more about what they're doing, about that devaluation trade. That's the central banker's job, is to devalue the currency, but to do it in a way that you don't notice. But now we're at the end. And so things that once worked no longer work. And when you see these titles, the debasement trade, what they're really telling you is that it's time, that they're telling you that this is the end of the system. The fact that they're so darn blatant about it. And why aren't people more up in arms? I suppose that's what's showing in the spot prices on both gold and silver. But I'm going to tell you, the physical markets are now overwhelming the paper markets. What's the difference whether it's a CBDC or it's a stable coin? You'll lose all your privacy. You'll lose all your control. We'll see. We'll see what happens. But this is why I'm talking so much about the great debasement trade. That is just removing the rest of whatever purchasing power yet remains in these currencies to push the fiat money prices, the nominal prices that we see on this stuff, to push that up. That's what that's about. Why is gold down so much today? It's a lot of profit taking, and we've been talking about this, right? And it's a risk on day because, hey, China and the US, blah, 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 blah. It's all excuses, but primarily this whole market, both the gold and the silver, and with the silver backwardation, which means the current price is higher than the future price. Okay, this is putting a huge strain because what's really happening in here is that the physical markets are overtaking the paper markets. And remember, in the US, that has primarily historically been a paper market. And they can create as much of that paper as they want to. So I think that we're seeing the spot markets on both gold and silver down so much today on massive profit taking, but also trying to discourage the movement that's already in place. Will it be successful? We're going to find out. At the end of the day, no, it won't. And I've told you this a gazillion times, and I'll probably say it a gazillion more. Personally, I am not counting on Wall Street to tell me what good price discovery is. It's not. It's a trading market.
When you connect the dots, it's clear the cracks in the financial system aren't isolated, and the charts are confirming what the fundamentals have been warning all along. The world is shifting from faith in paper promises to the reality of tangible assets. The same forces driving fear in the markets are also igniting opportunity for those paying attention. We're witnessing the early stages of a global reset, where debt, inflation, and loss of confidence collide. Gold and silver aren't just safe havens anymore. They're becoming the anchors of trust in a system that's drifting further from stability. Those who recognize the signals before the headlines catch up are the ones who protect their future. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.